Hello everybody, Jackson here with the Wealth Squad today, talking about the stock market because we are dropping hard. I was just doing a little looking around and I thought this was very important just to look at. You can see I'm doing like an all-time chart and I'm spanning out a little bit so we could just see exactly what we're looking at. For this, it doesn't look that bad, just like a minor pullback. But look at here, QQQ, it looks similar to here. Um, in the sense that we might go all the way back down to pre-COVID levels. Uh, and that will be a sharp drop. That'll go from 400 to 227, down around almost 50%. So something to look at. You could just see just the actual devastation that this crash has caused so far. Google, kind of similar. We're just retracing. Home Depot, Starbucks, Amazon has been a big one, all the way back to COVID levels. PayPal, that's not even comparison to anything else here. You can see prices dating back to 2017. Visa still doing pretty good. Facebook going out, not in a good way, going back to levels not seen since 2017. Square, also one that's just been falling like crazy. And Intel, one of the more steadier ones, which is not doing as bad as the others here. So just the impact this crash has had on the market has been very severe. You can see if I do the year chart from the all-time high to where we are at right now, we're down almost 30%. That's the tech index, checking SP 500, down almost 20%, down 18.5. So we have, maybe one more day just like this where it's absolute devastation across the board. But when you look at Facebook, you have to imagine that the earnings has grown so much in the last 4 years, and now we're at the same price that we were 4 years ago. It's a better deal now than what it was back then. Same with Google. During this time, this is a better deal now than during this time because Google is earning more money in comparison to the price. So you can see the price was $1,300. They earn X amount of dollars. Now they're earning more than X, even double X, and it's $2,200. So you can just see if earnings are growing at a constant rate, at a large, fast rate, and the price is not catching up to that, then that means it is a better deal. QQQ, that's harder to analyze because it's not just one company, it's a mixture of tons. So we'll have to, just look at the heart of this, and that would be FANG, right? That'd be Apple, Amazon, Facebook, at one time Netflix, now also Google in there, where it's just basically rolling over. We could also put Apple on the board here. Apple had a bad day today, down to 140 now. We could zoom out just like we did with the others. Not the worst crash Apple has seen. You can see right here, back before the split, I remember it was like the 160s or something, and it was just a huge deal. Like, wow, Apple's so cheap. But now it's gone up since then. So what we have to do is analyze these companies, not just these, but more, and ask ourselves, is this a better buy than what it was back then? And usually the answer is yes, and usually that comes with, then maybe I should buy it. Some other good stocks to look at here, Walmart. Let's check out Walmart. So Walmart had a bad day, down 11% the day before and down 6.8% today. Because of Target. Target missed their earnings by a long shot. They fell almost 30%. So you can see Walmart has the same price back in 2020. Not as bad as the others because Walmart's not a tech stock. But is Walmart earning more than back then? We'll have to find out, right? You have to look into that. We can add Target just for fun to see the devastation caused it, down 25%. Same price as November 2020. It's kind of just retracing the similar path of these tech stocks here. We could check out Nike down to 109. Same price as 2020. So a lot of these stocks are still up and above the pre-COVID levels. Nike was 100 before and then hit the 60s, and now it's back at 109. Target was 130, hit 80s, and now it's 161, and everyone's acting like the world's falling apart. No, Target is still way above the pre-COVID levels. Walmart before the crash, see right here, 120. They hit the 110, 105 range. Now we're back to 120. So a similar path there. Apple pre-crash. Yeah, that was right here. 77, then dropped to 60s, and now we are at 140. And everyone's acting like it's the biggest stock market crash we've seen. It is this biggest stock market crash we've seen just because looking at here, we have not seen something of this magnitude in a long time, in a longer period of time. So during the COVID crash, you could see from the peak to the absolute bottom, we fell 30%. But that was in, basically a month. All that madness happened from March to April. But now we are 6 months into this. Oh, sorry, five months into this, down 30%. So it's tough because it jumps back up and back down when this was a straight shot down. Sure, it had a couple up days near the end, and that's of course marking the end to the crash in the beginning to the rally. We have yet to see those big days. We saw one that was up 3%, but that's nothing in comparison to what we saw during COVID. So we don't know where the market's heading. It's smart to look into companies now. A lot of them aren't cheap yet. A lot of them are. So it's important to decipher what you invest in. But if you don't know what to invest in, S&P 500 is nearly $100 off of its top. That's the index. QQQ is $100 off its top. So these types of index funds will rather buffer your losses and overall make it easier to make money because you don't have to do much of a guessing game. It's just a buy and hold game. So I hope that makes sense. Market is tough. Once again, you have to find what's of value and what's not. Not an easy quest to do. So let me know what you think of this video, and thanks for watching.